Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, a brand new episode of the weekly stock market analysis show where we look at what happened in the market during the previous week and what we can learn from that and better plan for the next week. And this is October 17th, analysis for October 17th, Monday 2022, tomorrow, right? So let's get into the charts. What do we have here? This is a weekly chart of the Nifty 50 and the Banknifty that you see here. It is an inside bar. Banknifty also is an inside bar, but Banknifty is gained and closed above the previous candle's high, previous candle's close. So it's a gain there in the Banknifty, but consolidation can clearly be seen since the last 3 weeks. 3 weeks, market is doing nothing but just hovering around in a range bound way. The Banknifty is showing more strength definitely with a green close, and that's the view. Look at this daily charts of the Nifty, and this shows a red candle in Nifty, and the Banknifty also a red candle. What has happened is it was a Friday gap up following a US bounce up in the US markets, and then it could not sustain that gap up gains, and then it reversed, but still closing green, right? And Banknifty also same, but did not lose. No, it did not give up too much, but a clear gap up bounce up day. Which ended up with the reverse or profit taking on Friday. That's the latest Nifty daily charts that you see. Bollinger Bands, this is the daily Bollinger Bands, which is clearly showing that it could not maintain or retain or sustain the 20-day moving average, which is the median of the Bollinger Bands. So it's a weak bearish bias that we have, but managed to close above is what you see on the Banknifty on the 20 DMA. So Bollinger Bands overall is squeezing, it's contracting, and this may take a long time before it again starts to expand from here. And so contraction is what is happening. Contraction indicates sideways movement, but interestingly, the weekly Bollinger Bands, if you look at the weekly charts, it shows it's an expansion on the upside, right? That's what Bollinger Bands are indicating. And let's summarize it. So it's 130 points down last week, 0.75 in the Nifty, and inside bar consolidation. And Banknifty is plus of not too much, 0.3%. That's 117 points upon Banknifty. That is also a consolidation inside bar on the weekly basis, what you see. But Banknifty gained and Nifty not gained. Both are under the weekly trend line resistances from where it had hit multiple times and given up. That's the view of that. That is what you're talking about, right? It had attempted to break out of this multiple times and then failed, and then now it has taken a support of the weekly moving average of 20 and about 20 Banknifty after hitting multiple times to break out of that rounding pattern, trend line resistance on the upside. That's a weekly view. Now daily was a Friday performance of 171, and it was a gap up and reversal from there, right, when profit booking happened. 682 points were gained by the Banknifty, 171 points. It's a Friday move that happened. Before that, the market was very weak, and it is just below the 20 DMA, and it is closed above the 20 DMA on the case of Banknifty. So price action wise, Banknifty is clearly showing more strength, right, by closing above the 20 DMA. But the same pattern double top that we have been talking about is still there. It can clearly be visible in all the charts, right? That M pattern, M shape double top, it's still there as a threat. It's not cannot be forwarded, right? So consolidation with the bearish bias is what is still indicated, right? Although the bearish bias is can be ruled out on the Banknifty slightly, but it's still on the edge. A green close above the median has not happened. So Banknifty's weekly basis shows expansion and bullishness, and on the daily charts, it's still having a bearish bias with the consolidation, purely sideways movement indicator. Let's get into support resistance levels that you can see here. 17,345 would be the resistance on the upside, which is hit once. So that is clear. 7,500 above that. It's major. That's the major indication of an up move. 17,726 next, and 17,838 then 79.92 and 18,000 and 18,100. Let's see resistance is not the side. Similarly, downside you can see the first support from here would be 16,950, that zone. So 17,000 rounding number also would have some support, and then following that 16,750, 1650, 16,500, that zone would have gap resistance, previous swing low, and that's a major support. So that's which means it clearly means that it has made a swing high and then it's going to make another swing low, right, on the downtrend, right. That means it can, from here, there's also a confluence of the trend line from the COVID 2020. The trend line is also there. That confluence zone, if that is breached, that's if he is heading down from 16,500, 400, that zone, then we have trouble. Right? More upside can definitely be confirmed, but as of now, the hope for the bulls would be to close about the 17,500 zone. Right? Similarly, Banknifty, the resistance levels 39,759, 45,28, 41,159, 41,677. These are all the resistance on the upside. Then there is 41,000, 42,000 on the upside. Downside resistance 39,200 for support downside, then 38,472, then 37,950. All our previous swing lows. This is a mistake. This is the previous swing low. Then 37,250 below that, and then 36,800. So 37,000 levels, if that is breached, then that may indicate that another swing low is being made on the downside, and the confluence of that is 35,000. Breach of that would indicate that it's a confluence between the trend line from the COVID low, right, is confluencing with the trend line movement that's happening here. That's the levels of the support and the resistance on the Nifty and the Banknifty. We can note that. So this is a study about the momentum and the trend as the indicators, RSI and the ADX, what they indicate on the daily and weekly charts. Nifty is what you see on the top. Nifty daily is indicating there is it's in the sideways zone with a bounce up rising some momentum. And RSI is indicating that it's weekly also, it's sideways, but yeah, sideways rising, you can say, right. And on the Banknifty also, it is momentum is sideways, but it is rising on the daily. Weekly also momentum RSI is indicating rising and sideways momentum, right. Still does not yet climbed to the bullish zone side. ADX indicates a trend indicator is on the edge. We can see that there is a crossover into the bullish zones has happened on the medium term, but it is still in the bearish zones on the short term. I'm sorry. The trend is basically the trend is in the bullish zones on the Nifty and the Banknifty, right? But it's having a very weak strength. The strength indicator, the green line of the ADX indicator directional move, that indicator is showing that it's not great strength, but it's in the bullish zones for the short term. Nifty also is having bullishness in the weekly, but not great strength, falling strength only. But Nifty, it is set to cross over in the medium term. That's the trend indicator strength. So overall, trend is okay in the short term. Momentum also is fine, so rising in the sideways. So momentum trend is more in the favor of the bulls, you can say, right? And Bollinger Band. So overall, you can clearly get there is no great amount of bearishness that can be seen from the price action, momentum, volatility, and all these indicators. Right? Volatility is the less part. It is cool off a little bit. Right, 3% is cool down, and it is 18.25. Not too far from the 20. You have to be cautious. It could be a spike that may can happen anytime. So week to week, some cool off has happened. Why futures is in favor. Open interest is short covering and long build up that has happened on Friday. And the futures are the Banknifty and the Nifty. So that's bullish. Open interest PCR levels of the options are not that great. 0.76 and 0.67. 0.67 is for Nifty. So that's close. May not be bearish, but it's not bullish enough. It does not climb above the 1. So that's not enough bullishness, as you can see. So which OI is not giving too much bullish, but more on the bullish, more towards the bullish side, you can say, right? That's why these are the levels of the options. OI of the next expiry on weekly, October 20th, 16,000 and 18,000. Such a wide range. We don't know why the option writers have Given such a wide range when they are writing the puts and the calls. Right, 16,500. Right now it is November. It is well above 17,200 nearby levels. Right, so 16,500 for a week's expiry. 4 days to close, and 18,000. It's a very wide range, 1,500 range. Second highest put and call rating can be seen at 16,000 and 17,500. That's also very bad. Banknifty 37,000 and 39,500. Again 2,500 points of gap between the highest put and call rating. Second level is 37,500 and 42,000. 42,000, man. People are written. So the option writers are anticipating violent moves in the next week is what this indicates. Brokerage, as we have seen, futures OI is also we have seen is bullish. PCR is not bullish enough, but more towards the bullish side. That's about volatility and open interest. Moving on, sectorial performance. Let's analyze and see the IT sector has come back. Another near 1% of up has happened. Bullish candle. Momentum, but it's still sideways on BD so and the daily. So just add to wait. Metal has closed red down 2.8% and sideways momentum. Auto also down 2.25 sideways momentum, and medium term bullishness also is gone now. So wait, pharma 1.4% down, FMCG sideways momentum on both the time frames, and FMCG also 1.5% down. Reality is 4.3% down, and medium term has touched the week. It's bearishness in the short term. It has fallen slightly slipped into the bearishness. So reality, some kind of trouble may be seen there, but otherwise it is across the sector down move that has happened. Even the Friday's up move, gap up did not help. Except the IT. None of them have done well last week. It's only the IT that was doing the show. There were some results that were coming out from multiple TCS and Infosys and all that, and Wipro and all that. So IT was only stock that performed last week. Right? So that's not great news. So you can see that IT is in good shape. It is showing some reversal, but momentum, remember, it is still sideways. It's not bearish at least. There is a bullish divergence that was happening since several weeks on the IT entire sectors, and it is comfortably climbed. Looks like that. Now whether this major support zone that it is, whether it will reverse back and fall below that is the only thing that we have to be alright. Metal consolidating sideways, had a down week. Auto also down week, but it is pulling back after a breakout from the neckline of a rounded pattern. Some divergences were there last week, did not work out, and just slipped into sideways zone on the weekly time frames, and overall momentum is slipping. Pharma, some pullback after a good reversal. Faced, it's the sideways. It was rising till last week, and the breakout from the channel seems to have failed, and then it's fallen back to the channel. So there is a momentum dip there. FMCG also pulled back after a breakout from a rounding pattern. Divergence is seen, but slight slip into the medium term. Momentum also seen there. Reality has seen a big dip, but still not below the support zone of the neckline of the rounding pattern. Momentum is so it's across the sector except for IT. Don't see anything other than sideways movement or pullbacks or taking momentum supports, and all that is what you see there. Index average rising momentum in the HDFC, still in the sideways, good green close, and HDFC also is showing green, but there is resistance on the upside. HDFC Bank is on a support on the upside, distance is far away from 1,000 points far away. Reliance is also falling down the trend line channel at a major support zone with the neckline of the rounding breakout area. Momentum is sideways on the medium term. So nothing great, all sideways. On index areas are all sideways. Infosys IT, of course, they have pulled themselves back into the sideways momentum from the bearish zones. 3-4 weeks of green candles are seen in the TCSN, but still in the sideways. ICC was the performing stock, managed to maintain the bullish momentum, and is the only stock that's doing good. Is it the neckline of the rounding pattern? It is not breached, just takes support. taken support there. It's a consolidation in this week today, but you can see that momentum has climbed back in the bullish zones, and then there could be a reversal. There is a positive reverse divergence. Momentum bullishness can be seen there. Seems to be walking up. That's why we can expect some up move from here on the ICICI Bank. That's the only heavyweight stock that's performing very good. Kodak Bank consolidating, but green candle strong, but it has been moving sideways since several months and probably several years now. It has been doing nothing but moving down, up, but not able to break out of this zone of 20,000 of 2030. That zone above that, it has done it only once when it attempted to break out, so it's in the consolidation mode sideways. But the green close for this week. So except for ICICI Bank, all of the stocks just managed to hold on the positions and doing sideways. Institutional participation, it's unfortunate FIs are selling again. 9,940 big selling happened last week, heavy selling actually, and DIs were doing equally good buying. 7,000 managed, 7,000 crores of buying has happened to the cash. So net derivatives also is FID institutional positioning was downside. So this is a very institutional participation. It's jittery, money is not coming in the foreign institutions. It's only the retail money that's playing. So it's not that great participation from the institution, especially from the foreign institutions as of now. So I have to keep close watch on that. So here comes the trouble: the global markets and the global currency. Right, dollar has rose again 0.45, 113.3. It's a multi-year high level. Momentum is bullish, and it is multi-year resistance broken out and then crazy levels. Although last week was a pull back on the dollar. The dollar index charts is on the outside. You can see that it is a 20-year high. Right, just for the rising momentum. But one thing you can see that there is a bearish divergence that is there. That means there can be some pullback that can come in, is what the charts are indicating on the medium term. USD INR on the upside, you see here it's pullback a little bit, 0.7% of pullback has happened. Remember, it is after making an all-time high of 82.3 or 4 the kind of levels, and now this week it has circulated to 0.27 by a small pullback. But rupees at the weakest level, all-time low levels. Keep that in mind. US markets kind of mixed bag. You can see that global markets, the Dow Jones has managed to bounce up and gain just 1%. But look at this: the Nasdaq could not sustain that bounce up. It actually gave up 1.5% and it gave up 3%, and it's almost breaching that support zone. And it's a trend line channel, and then looks like it's going to the channel bottom. Same with the S&P 500 also, 1.5% of drop. Could not, you can see the wick size. It just attempted to move up along with the Dow, but did not happen. So Dow also had given up all the gains after making a spectacular rally. Did not sustain by the end of the week. It closed back. All of this has got momentum in the bearish zone. So this is going to impact our market. This is a trouble. This is a big trouble. Rising dollar, weakening rupee, and the US markets getting bearish and unable to recover, unable to sustain the relief rally that it made. This is trouble. So we have to keep a close watch on this in the pre-market on the Monday, and every day on the pre-market is where we come to know how to perform. If big falls are happening, definitely we'll have trouble. Crude oil has fell 8.6% down last week after making a 17% or more than that of up move. So that's it had hit the channel bottom and then attempting to move out, met the resistance at 93.5 and then fall down, giving a 8%. So it's good relief, but most likely it is going to go upwards towards the 100 plus. So that along with the dollar is going to be trouble. So the momentum has climbed from the bearish zones back to the bullish zones, but now it has taken a breather. Probably it's just a pause before it gains momentum further upside, is what I think. But the hedging instrument gold, look at the charts on the right side. Weekly charts are showing that it has breached the support zone where it has climbed with 2 weeks of up move, failed miserably. 1 week, lost all this. Now it's heading further down. Momentum has slipped from the sideways to the bearish zones once again. So that's about the hedging instrument gold. So in a nutshell, US dollar rising up is a trouble. US markets bearish is trouble. Crude oil going probably taking a pause, but anticipation of it Further moving up is a worry, so these are all global cues are not that great. Now, moving on to the stock picks for the next week too. Federal Bank is breaking out of a rounding pattern, multi-year rounding pattern, and good risk reward if you trade if the price moves above the previous candle's high, previous weekly candle's high. So momentum is bullish, trend is bullish. Pyramid enterprise on the short side, right? Weekly chart is what you see. Head and shoulder was confirmed, and it is breaking down, and you can give a short swing trade for the next week. Momentum is bearish on medium term, and trend and the ADX indicator also showing bearishness, short and long. Federal Bank and Pyramid Enterprise short. Federal Bank is doing great, and this is the payoff of Nifty option strategy. The double diagonal calendar spread that we come out with every week gives a very good risk reward if you're touching for 2 to 3% max. Good probability of trade and good probability of profit. I mean, pop and risk reward. You'll have to just charge it for 2-3%, not more than that. Do not keep it till the last day of expire. Do not do that. Right. So yeah. So this is basically about selling the next month's next month's call and the put options with OTM, and then buying the hedges for the 4 month, right? So it has got the volatility back advantage also if the VIX spikes up, and gives a very good range. Look at this: 16,700 and 17,500, right? Even if a 3% move happens in weekly basis, it's not going to happen. If you trade till the Wednesday, that kind of moves are very less likely unless it breaks down. Even breaks down, you can always roll down. All these adjustments can be done very easily, just like you do it for its triangle. But it's completely risk defined. That's advantage, and gives consistent profit on the weekly basis if you target for a smaller 1-3% kind of profits for the week. Just to wrap up, after all the studies that we have done, clearly we can see its market is consolidating, is what the charts and the data is saying both. Right? For 3 weeks it's doing that. Last 3 weeks it has been doing nothing but just moving up, moving down, moving up, moving down. It's the same thing that you see. And remember, this is happening after a correction of 7 to 10% in the indices, right? So it is trying to move up, then given up, corrected, now consolidating. Now we don't know. Maybe upside. It may be taking enough breadth and enough energy for it to move further up. We never know that. But as of now, there is a bullish bias that is seen in the Bollinger Bands on the weekly, but a bearish bias on the daily. So short term it's sideways, long term it looks like it may be expanding on the upside price. Why futures is on the bullish side, right? It's showing long build up and short covering. Is good push. Futures is more close to bullish, but not bullish yet, right? And momentum and trend indicators are also in the positive side. We've seen that always. So in general, so the view for the next week is going to be neutral view with mild bullish bias to that. That's what I will say for the next week. But the only trouble that could come in is from the US markets. Weak group VFI is continuing to sell. US markets unable to sustain the major support zones instead of falling those so much. The high VIX not ready to settle below 17 or 15. That kind of level is not going there. That's uncertainties, and the global cues are not that great for the VIX to settle down. So there is sentimental uncertainty that is still there. That prevails, and you have to be cautious about that. Global cues are not that great. US inflation, Fed interest rate, all this uncertainty, it's going to take time for that recovery to actually happen. Right? Crude had cooled up a little bit, but it was spiking up, and it is most likely to spike up further. So crude and dollar rising at all-time highs. Rupee weakened. All this adds up fuel to the uncertainty. You have to be simply cautious. Stay out of the trade if the VIX is rising above the 20 if you are in derivatives and options. Right? Protect your capitals with option strategies like covered calls and different strategies are there. Check out the playlist if you're not seeing that. So I'm talking about protecting the long-term quality stocks that you are looking for 5-10 years, that kind of stock, and that kind of stocks, not the others, right? Others you should exit them if you're an investor, and you should exit the moment 200 DMAs or other indicators are going against you, depending on what is your horizon, right? So never take positions above 20 if you're an amateur. It means if you're a novice and Even if you're an expert, it's better not to trade when volatility is too big to handle, right? Or at least cut short your position size. Right? That's the best thing that you can do. Manage your risk. Get out when the market is not in your favor, and then stay on when the market is moving in your favor. That's the trick. So I hope this. So the view is, as I said, is neutral view that I have. Neither bullish nor bullish, but my bullishness is what the charts are indicating. That's what the charts are talking to me. Right? I could be wrong, but there is mild bullishness that is there. But all market is consolidating, and I have a pure neutral view. So that's it. If this video helps you in some way in framing your trade plan for the next week, it helps you to frame your market view for the next week based on all the study that we have done. If it helps you in some way, please don't forget to subscribe. Please share it to maximum so that we get at least few minimal number of subscription levels are very low, and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.